Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 22nd of December 2019, and we're going to give our forecast for gold prices to the end of 2019 and the direction we predict they may be heading into 2020. But first, a quick plug for two videos we produced yesterday and one we published earlier today, namely Sterling, Brexit, Equities, Gold, Silver and US Politics Part 2, which included our discussion with controversially Greg, Sterling, Brexit, Equities, Gold, Silver and US Politics Part 1, published yesterday, and our Gold and Silver weekly update for the week ending the 20th of December. And we've placed links to all three of these videos in the description box below. Now, gold prices rose last week by just $3 to $1,478, down 4.6% from its year high, but nevertheless up some 17.2% from its year low and up 17% during the past 12 months. A creditable performance to say the least. Now, because of the weakness of other currencies, gold has so far performed better in euro terms, up some 20%. And due to the recent strength of sterling, because of the Boris Johnson Conservative Party victory, gold in sterling terms is up less, but still a respectable 14% during the past 12 months. So in dollar terms up 17, in euro terms up 20, and in sterling terms up 14. Now, no one can criticize such a gain, and especially bearing in mind how incredibly US equity markets have also performed over the same period. Now, this is exactly over the past 12 months, not from January the 2nd, but 12 months to today. The Dow Jones, currently standing at 28,455, is up a significant 30%. And the S&P 500, at 3,221, is up at an enormous 37%. Huge gains, especially when considering how much equity markets have risen since the 2008-9 collapse. Now, admittedly, 12 months ago, stocks had fallen in the December because the Fed decided to raise interest rates. But we have to take a benchmark from somewhere, and so we're still comparing like with like in terms of time frame. Now, looking back through our various videos and records, and especially comments made in our regular updates, we expected, broadly, gold to finish the year somewhere between $1,300 and $1,400 in the early days of this year, especially if one considers that for the first 5 months or so of 2019, gold did actually tend to vacillate between $1,270 and $1,300 most of the time. And to be frank, we actually saw, and still see, 2020 as being more exciting for the precious metal, especially as it would be an election year. So even though gold was sort of oscillating between $1,270 and $1,300, we did think that it would more or less peter around that sort of level, but could hit $1,400. Now, the dispute with China at that time was more or less seen as something that could be overcome quite quickly. And geopolitically, President Trump appeared, at least, to be making positive gestures towards what we would call traditional global enemies, thereby at least giving the impression that world conflict could reduce. Now, we could see by April that the central bank was likely to lower rates, not by much, but enough to underpin gold at the $1,300 level. But we could not really see too much which would push it much beyond $1,400, and certainly $1,500 would have required some very major conflict or financial failing. Well, to some extent, starting in June and peaking in August, such failings, or the fear of failings, came to a head, with gold peaking at $1,546, looking to go even higher. And the likes of the Schiffs, Maloneys and Morgans of this world stating that $1,800 was on the cards with the year end close to, if not surpassing, $2,000 and $5,000 to $10,000 in the not too distant future. Now, we have to admit, our economic modelling, which we've used long before we set up this channel, suggested something very different, save one factor: the ratio or weighting we have to place on fear and greed, which is more experiential than scientific. After all, how can you accurately measure in a scientific way the emotions of panic and euphoria, envy and avarice, fear and greed? Now, we do have a weighting, but it tends to be based on what has happened previously, rather than any Einstein-type formula. Now, this led us, therefore, to predict on the 29th of August, when gold was standing at 1541 and was testing the 2013 market inflection point at 1550, we stated then that we, and this is an actual quote, believe a correction is coming short term, unquote. And it did. And that video got us 14 thumbs down, more than usual. But thankfully 347 thumbs up, even though less than 6,000 views were received. Now, even though we expected a correction, we did actually add a too strong weighting to the potential bounce back that could occur because of the fear factor. As politically Trump was in turmoil within his cabinet and appointees, the battle with China was deepening, he was then threatening the EU and NATO, and this is what we concluded in relation to gold in that video that we published. Quote, our prediction for 2019 gold high is between 1,600 and 1,700, and at the year end we're expecting gold to fall back to 1,550 to 1,600. Now that was back in August. Now, in case anyone doesn't believe us, we've placed a link to this video in the description box below. Well, we didn't quite reach that 1,600, being therefore a little over $50 off. And it is a little over $50 less than where we predicted the price to be so far at year end. Yes, we still have a week or so to go, that is true. But when we compare our thoughts at the start of the year, with gold being around the 1,400 level and at 1,500 at worst, and at the end of the year predicting it would be somewhere between 1,550 and 1,600, when others, and virtually all of our competitor channels stating 1,800 to 2,000 and potentially even $5,000 in some cases, we do not really mind being wrong by $50 or so, and are quite pleased with our assessment. Now, okay, there is just virtually 1 week to go, and one must ask, how do we see prices moving from here? Well, let's be perfectly honest about this. Short of a black swan swimming by or a tumultuous banker or financial institution collapse, the gold and silver market volumes are going to be slim. Now, this means that any positive or negative news is likely to have a disproportionate impact on the price. So, this next week generally does not paint a particularly strong picture as to where gold prices will be heading, and we really have to go to the second or third week of January to get a much clearer indication. Now, of late, the dollar value has been the prime determinant of the gold price, and that itself has been predicated by news of phase 1 of the US-China trade deal, which we're all told is agreed, with just translations and minor details being amended so that it will be ready for signature in early to mid-January. Now, if that does come about, then equity markets will continue to reach even new highs, and in the main, equity markets tend to do well into the start of a new year. Now, this will prevent gold from rising by much because investment monies are going elsewhere. But that said, in US dollar terms, gold markets also start to pick up early in the new year, having generally debased themselves in the December before it. So we can see a mild rise in prices, and very mild at that, into 2020, providing, of course, the China trade deal is signed. If it isn't, then we can see equities fall back and gold prices rise more aggressively. We also hinted to watch out for North Korea and their so-called Christmas surprise in our weekly update. As if there is one, and it isn't pleasant, this could have some bearing, and we are receiving reports which will be announced by the media soon that tensions here are building up again and more so than has already been reported. Now, one of the major questions we've asked over the past 2 weeks is that with Brexit being almost now determined, not quite, but almost now determined, and the Fed having already given its forward guidance on rates, and the US-China trade dispute having allegedly been agreed, or at least phase one of it, then why have we not seen quite a large fall in the price of gold, as many of the fear factors have been removed, at least short term? Well, from speaking with 2 traders and making a calculated guess or estimate, it is quite possible that in this last week of trading, equity traders may decide to take profits. After all, we are talking about extensive gains having been made, and in the past few weeks, multiple all-time highs have been reached. Therefore, it is very possible indeed that gold is being supported because of this possibility. And it would actually, and does actually, make sense. Though traders will also be looking into January for confirmation of the US-China trade deal, which will boost equity markets again. Therefore, our prediction for gold this year end is unfortunately quite unexciting. We believe it will still operate more or less within this $1,450 to $1,500 range that it has for a while. That said, if equity markets do sell off, even in a moderate way, adding another $20 or so to the gold price is no biggie, and we suspect traders would like to see that psychologically important $1,500 level being breached or at least attained. With this in mind, whilst our instincts tell us that gold really now should be closer to $1,450, we will take a bit of a punt and predict here that there will be some equity profit taking, and gold will oscillate closer to $1,500 by the year end. A healthy gain for the year, nevertheless, and we wouldn't totally rule out $1,525 if equity selling is a little more robust. If, however, equity markets do not sell off and traders are content to run their profits, then $1,450 will be the lowest level before the year is out. But we're going to remain mildly bullish, as we would sell shares ourselves into the year end to maximize our capital gains allowances if we were living in the United States, even if it means buying the stocks back early into the new year. But of course, in the United Kingdom, our financial year end is different to that in the United States. Tomorrow we shall be publishing, but it will be late GMT, our silver forecast. But meanwhile, thank you so much for listening. Do comment whether you agree or disagree. And if you haven't already done so, please subscribe to our channel. Press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.